very much. We'll move now to the Q&A session, and as I said, welcoming your comments and feedback via the Gmail address. So we'll keep those coming. We'll also put some roving mics around. I'll just kick it off with a couple of questions to get us underway. Louise, firstly to you, if you had to summarise perhaps how your viewpoint has changed in terms of consumer issues and consumer advocacy, and you gave us some perspectives in your presentation, but how would you characterise how your own sort of view has changed over that time?
Well, I think when you're sitting in a consumer organisation, I mean, in the UK environment, we always talked a lot to people who worked across the financial services industry, energy industries, all the different areas I worked in. But actually, kind of taking this step across and talking to the CEOs directly and understanding, really seeing what they talk about, it is eye-opening, because actually, you know, they're not ogres. They don't want to kind of rip their customers off. But there is, it makes you understand how difficult it can be as well, particularly in a UK market where we have statutory regulation, where there is obviously, just like you would have as well, a massive first mover disadvantage. There are a lot of discussions about practices that they recognise are damaging the reputation of the industry and it's not like making a lot of money for them, but actually how do they sort these problems out? And that's why they want to engage with regulators to do that. So I think the biggest change, and it's probably an age thing as well, I mean, when I first started campaigning, you know, you're kind of out there sort of, you know, marching. And you, as you age and also you kind of, you talk directly with companies, you just understand a different perspective. But it doesn't, and that's why I was talking about shared perspectives, because actually I genuinely do believe that people who work in industry sectors like insurance and consumer advocates really do want to achieve that fair and effective market. It's not always easy to get there, particularly when the customer doesn't act, as we say, in that kind of logical, expected way. That's the complication, I think.
And Sue, from your own perspective, particularly coming from a media background to now leaping into the fray, how has your perspective changed?
Look, you know, I agree with a lot of what Louise has just said. And interestingly enough, I was at the banking ombudsman meeting yesterday, and we had our AGM. And Adrian Orr, the head of the superannuation fund, came and spoke, and he was talking about long-term investment. And he was saying now, you know, long-term investors are looking for companies that are consumer-centric. I mean, he used those words that, you know, do care about the environment, that do care about sustainability. And he said, you know, the people that are the head of these companies don't leave home in the morning and become a different person when they arrive at work. You know, so, you know, like, I accept that everybody is, you know, people are well-meaning, and that and the future for business is in being more consumer-centric. Yeah.
So on that point, I wondered, you made some references in your presentation about the industry. How would you grade the insurance industry on a comparative basis? On that basis, because some of your remarks were quite pointed in your address. So where does this industry sit against others, perhaps?
Look, I think the industry is trusted by consumers. I think people generally, if they take out insurance, think that they will get, you know, if they need to make a claim, they will get their insurance needs met. But there is scepticism about the price, and also hidden terms, the terms and conditions. Not that many people read the terms and conditions. I think that whoever said that this morning was absolutely right. But I do think that the industry could do a lot better, and I think today, and the theme of your conference, is obviously an industry that thinks it does need to do better in the consumer space, and, you know, I think congratulations for doing that.
So is a stronger regulatory approach really the answer to better consumer protection? I mean, self-regulation, obviously, if it provides the right consumer protections, is that preferable in your mind?
I think you need a mixture of both. You've got to have regulation, but you've got to have good regulation, and that is useful and is being applied, and it's not just tick box. You know, I'm reading you this because under Section 64 I have to disclose this to you. It has got to work for the industry, and it's got to work for the consumer. And along with the code, you have to actually make sure that you reach the standards that you're setting for yourselves in that code, and that code can be applied.
Yeah, I mean, and in the UK context, obviously we have statutory regulators. But I mean, the really important thing to remember as well is that regulation brings a level playing field. And actually, all businesses like a level playing field. And so we have a huge amount of investigations into a whole range of different aspects of general insurance, and some of it's very difficult. But the regulator has gone through a period of kind of reflecting and engaging with the sector and listening, which is good. But I mean, we used to have a self-regulatory environment. We don't now. It's not the end of the world to have a statutory regulatory environment, but I think you're right to reflect that it brings with it an awful lot of time and energy and unintended consequences as well.
Okay. I'll take some questions from the floor. I've got a couple of email questions that have come in. I'll take one here. Thanks very much. We'll just get a microphone to you.
Hi, Louise. I have a question for you. I'm aware that in the UK they're doing some work looking at existing business and looking at that existing business and whether people are paying too much compared to new business.
Right.
You've talked very eloquently about how you have such fantastic comparison websites in the UK. It seems to me that it's rather unfair that other consumers who use those comparison websites have to pay for the cost of insurers effectively going back to business that's already in place to go, come on, don't be lazy, look, you could get it cheaper somewhere else. And I wondered what your comment was there, because going back to business that's in place, especially when it's an annual contract that is renewable, and I support your comments on disclosure of previous year's premium, but I object to all policyholders having to pay for the cost of lazy policyholders.
It's a real dilemma, this one. I think even when I was at Which, I used to get a bit frustrated because the mantra was shop around, switch, and that's all the politicians say in the UK. It's like, well, not every consumer thinks it's that interesting, actually. It's kind of like, it's like switching energy. It's like, I don't care, it's energy. It feels the same, it tastes the same, it switches my TV on. And it's perfectly legitimate for consumers to not bother sometimes. But the problem then is the way in which the market dynamics work. It was interesting, I was at Party Conference back in September, and this woman was asking a question about, she said, I've just realised that I cross-subsidise. I'm a loyal customer, but I'm cross-subsidising all of those people who are kind of jumping around the whole time. And we really rather rudely call those in the credit card market in the UK rate tarts, which is not very pleasant, but you get the picture. And so, there are different consumers, some of which, are active and they all switch, and then they are given the introductory year discount, and the ones who are loyal or who can't be bothered, depending on your point of view, end up cross-subsidising them. But of course, if everybody switched, then those cross-subsidies would disappear anyway. It's a really difficult one. I think that disclosure is really important. I think that our sector has said that they want a cross-sector approach to telling customers at renewal what they paid last year. But a huge amount of insurance is bought through introducers and brokers, so the providers who I represent don't want to do that by themselves. But I think the initial views from the FCA are that, well, disclosure only goes so far. Even if you tell customers, it might not actually make them switch anyway. And that's exactly what we had in the energy sector. There's just a real challenge here, I think. And I think, again, that's a job for insurers to think about their business models. And, you have some insurers in the UK who absolutely value their loyal customers, and they price it differently to respect that. They might be based in rural environments, for example, and other insurers who think it's cheap to access new customers because price comparison websites, price of access is cheap, so we're happy just to have the churn. And those are perfectly legitimate different models, but that butts up against consumers who behave in different ways. I don't have the answer. I don't think politicians or regulators have the answer to. I think it's just a really difficult one, but more can be done, but I'm not sure we'll ever fix it.
All right, thanks, Louise. Just a segue to you, Sue, a question from the email. The power switch concept is an interesting one and clearly beneficial for consumers. How does the site facilitate switching by consumers, and what would you like to see insurers do to enable more effective switching of insurance products?
Yeah, so at the moment, Power Switch, what it does is that if you want to switch, you click switch, but you don't actually switch on the site. So it pre-populates a page and it goes off to the power companies. we're looking at the moment, and technology for us, because we couldn't afford it basically, had meant that we couldn't really do the switching on the site. But I think we've got some support from the industry, and technology has changed, so it's actually a hell of a lot easier now for that to be achieved. We're looking at potentially allowing people to actually switch on the site. So I would see that exact same thing working in the insurance industry. And the reason why we haven't gone in and done it in a similar way that we did with power and telcos. With power, we've had full cooperation over the years from the industry. And interestingly enough, people won't switch unless they see more than $150 of savings. So under that, they don't really, it's just not worth their while. And telco, it's harder because the numbers are smaller, so you might only be saving a few dollars by shifting your plan. And they had been less supportive, so we kind of just scraped their sites. But because you put so much into actually the prices that you come up with, it's not so, we do have to have cooperation from the insurance industry to actually develop something like that, because we know the complexity of how you actually arrive at the prices that you do have.
Louise, a question from the email. How has the UK addressed the problem of consumers buying purely on price from price comparison sites without considering the cover figure?
Yeah. Well, I mean, there was a review by the FCA of price comparison websites, which found that whilst some were good, that there were significant problems around some of the payments that were made, some of the information. There are, though, many of the price comparison websites that recognise the fact that price isn't everything in this market, particularly particularly in areas like home insurance, which of course it's not a single product really, is it? It's various products kind of bundled together, and the importance, and we know from our own data, the importance of being clear with customers what is covered and what isn't. So, and we work quite closely with the price comparison websites to do that. I don't think anybody's got the answer yet. I mean, it's, you've got them ranked. So, and I think there was some kind of thing about 30% of people will go for the top kind of cheapest, and then there's a big bulk of people that will go for on the top 5. So, you can understand the strategies, therefore, that insurers will use to try and get in there. So I think it's about insurers working with price comparison websites, talking about how information and key terms and key cover is disclosed upfront in simple terms. But even if you don't go through price comparison websites, there's still a lot of customers that don't know what they're covered for. So it's not unique to that, I think.
Okay. Any other questions from the floor?
There's one at the back.
Over there. Thanks. Just get a microphone to you.
Hi, I'm Josie Vidal from EQC, and I have a question about the sort of consumer advocate media crossover, which Sue probably is your field. And you did mention the North and South article, which probably made Tim Grafton and my blood pressure raise a bit, because there was nothing accurate in that. And we are complaining about it, and I'm pretty sure ICNZ is too. And that's part of the question is where is the public interest or public good of ill thought out, inaccurate media campaigns, which we've all been subject to in Canterbury, where even consumer advocate groups have gone to the media and said, this is exploitative, this person is unwell, you shouldn't be using them to fill your newspaper or radio or whatever. So is your organisation interested in commenting to media and educating media? The consumer advocates we work with in Canterbury do sometimes say to the media, you're going too far, this is wrong, you don't understand insurance, you don't understand what's happening. Where is that sort of crossover, and how could that work?
Sue, you're in a unique position to comment about this, because obviously having worked in the media for 25 years, you're now on the other side of the desk. How does your view of the media's role in consumer advocacy perhaps changed, and how do you characterise the media, I guess particularly in this country, in that role?
Well, just in terms of our relationship with the media, because, you know, in our organisation we're on the side of the angels, we have a very good relationship, and, you know, I've really had very little go wrong in terms of how our information has been interpreted by the media. But if you're asking me more generally, in fact, we were just talking about it at morning tea, you know, the media is under a huge amount of pressure, particularly, you know, the traditional media, and, you know, fewer resources, demands to be first across all sorts of, you know, different platforms, with a young staff who aren't necessarily as responsible as they should be. So things are going to go wrong. Now, that does not explain your blood-boiling North and South article, which was written by an investigative journalist who had a very long time to write it and has been around for a very long time. So I read it, and I actually thought some of these things don't actually add up as well. So, you know, you are always going to get a journalist maybe writing for an article like that who has a point of view, and that point of view will come through that article despite the information that they might hear. So, you know, and you'll have an avenue to complain about that. But look, I think generally the media is under a huge amount of pressure, particularly, you know, newspapers and TV journalists scrambling for a smaller and smaller dollar. And so if they can get the headline, they will go for it.
Yeah, I mean, it's the same in the UK. Consumer mis-selling, scandal, shock horror, you know, high charges, it all sells papers. And you just have to deal with it. I mean, you know, the sector I represent both general insurance and also long-term savings insurance, and I think that there have been quite a lot of cases where, you know, the practices deservedly have been on the front page.
The other part of it, so I mean, the media does have, obviously, you know, disclose it in but the media does have a role, obviously, in this process, doesn't it? I mean,
really important.
I mean, while obviously not every article is going to be agreed on, there would be plenty of other examples where the media does do an effective job.
And provides the platform for people to, you know, get their view across in columns and opinions. And, you know, on a day-to-day basis, you know, we know how the world works because the media tells us. We can form our views on that information, but that's how we know how the world goes. So they're a very, very valuable part of a democracy.
But I think as well, with the explosion of sort of digital media and blogs and Twitter and different, you know, the sector, all industries have the opportunity to create their own content and create their own messages and get the messages out in a way that they're simply not reliant on the traditional print media in the same way. And I think that that's a real opportunity for people to engage there.
I think that's an excellent point, and it's a comment that I make regularly to industries at events like this, that, you know, what are you doing to help yourselves in that situation?
And also
get
to
your message
partner.
out?
Yeah, and we, for example, partnered with the Money Advice Service, which is an independent organisation set up, funded through a levy on the sector to provide kind of factual, independent financial information to help people manage their money better. And, you know, certain parts of our membership who want to promote income protection insurance have paid extra to do information campaigns with them. You know, you can just get around the traditional media by putting out positive messages through trusted partnerships. I mean, clearly the Money Advice Service would only do, you know, the messages that they would agree with, clearly. But actually that's a really positive way of getting your message and getting what good insurance does out into a wider audience.
Just a question too, in the UK context, has the pendulum hit a happy medium in terms of consumer protection in the UK and Europe, or has it tilted more perhaps one way?
I think that depends on who you ask.
Yeah.
So if you ask the consumer advocates, they'll be worried that Martin Wheatley, who was the CEO of the Financial Conduct Authority, is now gone. Some see that as a sign that the government wasn't so pleased with kind of his consumer advocacy agenda. Some in different sectors, not just insurance, will talk about how the amount of work that the FCA does and that's a real challenge. I think all financial services and insurance kind of have a lot of work to do with the prudential regulator. I don't think you can say the pendulum is one way or the other. I think it depends what the issue is. So we've got a lot of work happening on data protection at the minute. That's all driven through Europe. It's a massive agenda. It's a massive piece of legislation, and it affects everything. And through that sort of years of work and the period of lobbying, you know, at one time we thought, oh, this is going to be really significantly potentially bad for the sector, and then, you know, you work with the legislators and it improves. So I don't think there's a simple answer to that. I think it depends very much on where the issue is.
Okay. Question from the floor. Okay, so question from the email. Louise, you talked about the consumer credit issue in the UK and the large refund required. It's an enormous refund.
It's extraordinary.
Really. That must be something of a world record.
It's extraordinary. And it's, it was actually Which that first started, in fact, when I was at Which, we first started reporting on payment protection insurance and described it back in 98 and then early 2000. We described it as poorly and oversold. And, you know, when there are warning signals like that, someone should be listening. And then there was a super complaint by a sister consumer organisation, which is a legal function that consumer organisations have in the UK, to make a legal sort of complaint to the regulator, and the regulator has to investigate it. And then they said, oh, here's a problem here. And then, I mean, this is a long time ago. And then the claims management companies got hold of it, and it's become absolutely extraordinary. And now the regulator's probably going to put a time limit and say that people need to put their complaints in by 2018. I think there's clearly a lot of concern about the amount of fraud that's happened. But other people say, well, you know, that's one way of redistributing money from the banks. So, so it's the banking, it was a sales issue, basically. But yeah, it's extraordinary.
So the question is, do you see any current coverage being offered now that could cause a similar problem in the future?
I think no would be the right answer there. I mean, clearly everybody's more than aware of what happens when you sell. I mean, it was an add-on product, basically. There's been a review of add-on products by the FCA, and they've looked at it, and they've flagged a few minor concerns around certain areas, but there's nothing in the scale. And I think journalists, consumer organisations are so on top of this now that if you started seeing anything early, it just wouldn't get to the scale of what happened because there was just years and years of this product being sold, so no.
So what do you see as the next steps in the UK and EU consumer regulation space?
Well, data protection is really important, so we'll see what happens there. I think I mentioned the fact that that there remains the concern around using certain risk ratings, risk factors, and obviously age and disability and health is one of those, and that's something that is a big concern for insurers. It's not something that's actually being legislated on, but it's always a potential area that Europe might get more interested in. And in the UK, I think for general insurance, it's about working closely with the regulator to get some of these transparency issues changed, and recognising as well, you know, we've just launched this code on vulnerable consumers. It's really hard because the FCA doesn't even define what a vulnerable customer is. It's, you know, vulnerability can be different things for different people at different times. But I think it's about the sector putting its foot forward, tackling issues that are out there, and trying to work with partners, for example, in the broker community, with the consumer organisations, and also with the regulator to try and fix some of these challenges, all in the environment where the consumer financial capability is quite low. And so supporting, you know, improving financial capability is also a really important agenda for us.
Sue, question for you. Do you think the independent dispute resolution schemes provide the right balance and protection for consumers in this country?
In some industries they do. I'm a director of the Banking Ombudsman scheme, so most, 80 or 90% of New Zealanders would have a bank account. I think the problem with that scheme is not enough people know about it, and I think that that is an issue across all of the schemes. The Insurance and Savings, I think it's just changed its name, but there has been some concern from us about how independent that scheme is, but I think it has improved. And we were sort of quite interested in how many cases it seemed to deal with out of Christchurch. But I don't think we had the right end of the stick there. I think they had an office down there and they were dealing with quite a few complaints. But certainly we did have some concerns about the insurance scheme, but we think it's improved a lot. And across the board, I think that they have improved, and because the government's taken a bit more interest in it, and also the fact that industries actually have to belong to one. Yeah.
All right, this is a question for you both. With the rise in new technology, are we seeing more consumer self-regulation with less or different roles for government and industry?
Oh, look, absolutely. You know, if you want a complaint, you make a complaint now. Why would you go to the Ombudsman when you can go onto Facebook? And
You've got to get a quicker response too, actually.
that's right.
Yeah.
And you go onto their Facebook page and you complain about the business and you get action in half an hour. So new technology has changed all of this, and in fact, all the disputes resolution schemes actually have to start thinking about that. How are they going to respond to that, and how are they going to deal with their complainants in a different way? So yeah, I mean, new technology affects all of this, and very much in many respects to the benefit of consumers who have access. For those who don't have access, you know, that's a completely different story.
And the
Yeah,
same
exactly the same. And you see
Yeah.
stories that are small suddenly get volume in 24 hours. And, you know, and it's not just insurance, lots of sectors really kind of like with lead boots on, trying to kind of respond and saying, give us some time. And it's like, what generation are you living in? I mean, you know, they want to have an answer. And I think as well, that's a real challenge for lots of sectors to weigh up the challenge of paying out and getting it sorted versus the reputational risk and holding out and doing the right thing in their books. I think it demands a very different response, and we've seen some very high profile examples that have just gone spectacularly wrong in the UK for the insurers.
What's your experience about the way that's managed? I mean, I know in the US, for instance, there are some companies run literally social media control centres. So they're like a sort of mission control thing with all the, you know, they can watch the screens, everybody can see it. As it's coming in, it's being dealt with and managed, rather than a sort of a crisis response. Hey, we've got a terrible Facebook post, what are we going to do about it? I mean, are you seeing, you know, both different approaches? I
Yeah,
guess,
different approaches. I think different approaches to everything in innovation and data. You know, so for example, a lot of insurers will set up. We had a big conference like this just a week ago, and somebody from KPMG was there actually, saying, you know, the response to kind of innovation isn't to sort of put an office on one floor and tell your staff you can wear jeans and kind of come in late. And that's not what you do. It's about really thinking about what innovation really means, and it's exactly the same as how you respond to, you don't just kind of get the same sort of offline practices and try and put them online. It's a conversation you're having. And you have to get people who understand how to have that conversation digitally and with a different generation to lead that. And that then means that internally, I think you've got to think about managing that risk. Because what happens if somebody who's, you know, isn't the lawyer is saying something and you don't like what they say? So, you know, it's a real challenge. Of course it is. It's not easy. But it's got to be tackled.
Sure.
I was sort of saying just that social media thing is, because it is a conversation, you know, it's really hard, particularly I guess in your industry, to push messages out that are just, you know, straight sort of PR messages, because people can see through that straight away. So it is really important to manage your social media very well.
Yeah.
Before it starts managing you.
Yeah,
Yeah.
quite.
All right, any final questions from the floor before we wrap up this session? Okay, thank you. Can I ask you to thank our panellists and speakers, Louise Hanson and Sue Chetwin. Thank you very much.
Thank you.
Good.